Is now the time to put more money to work in tech? Is the coast clear, so to speak?
I think if you haven't owned them, buying them on a pullback like we've seen is okay. But in terms of what we have been doing, we established a tech overweight earlier this year during the March-April timeframe, and we actually eliminated that overweight in late July because we felt like the tech story was well known. The stocks were getting a little overdone. And here we are, we're 7 months into the COVID environment that we've been dealing with, where many of these companies are experiencing a renaissance in terms of the overall market share gains they're winning and adoption happening. But we're concerned that when we look forward to next year and the following year, that we could see the more cyclically oriented sectors actually out-earn technology because so much of it has been pulled into 2020. Yeah. So with that in mind, we think that could be the catalyst to get some of the more cyclically oriented sectors moving the right direction and for a catch-up trade to really begin.
Joe, are we calling the coast is clear too soon? These stocks ran up a lot, and we're talking about a 1 week, not even sell-off. You know, okay, last week Apple was off 7.5%, Facebook was down 5.7%, Amazon 5.4%, Microsoft 4.8%. Alphabet 4.1. That's it? That's the sell-off that you're going to get? These things are fine now? They're going to be back? Just keep going full throttle ahead?
Yeah, I think we're calling the coast being clear a little bit too soon. I would use the word encouraging. I said on Friday I believe that much of the price damage had been done, but I'm not necessarily sure the time damage has been done. So John mentioned the 50-day moving average. There was technical support for both the NASDAQ and the S&P at the 50-day moving average. You're seeing the technical support coming to fruition today. I also think a little bit of the merger Monday effect is lending some confidence and obviously some positive pricing to equities. But no, Scott, the coast is not clear. We have a volatile period, as Rob correctly defined, as we look forward towards the end of September and into the fall.
Yeah, NVIDIA, ARM Holding, that's some M&A that we got. That's a possible catalyst for things to move to the upside, too. Jim Lebenthal, you own a bunch of these stocks. You own Apple, you own Google, and we can talk about maybe one of the fallout effects from the NVIDIA deal as well. But what's your take on big tech right now?
Well, the names that you just mentioned, big tech, Apple, Google, and somebody else was mentioning Microsoft. I think those have been fairly priced. If we take Apple as an example, it's around 29 times next year's earnings. If this were a year ago or 2 years ago, we'd say, wow, that's expensive. But the fact of the matter is we're in a low interest rate environment, and any stock valuation model that you use, just about all of them are going to respond upwards when you lower interest rates the way that they have been, and they're going to stay low for years to come. So those names don't worry me at all. To Joe's point that, maybe we're not through this, where might you see some after tremors? I do think some of the higher flyers, the things that are up 3, 4, 5 times on the year, are still susceptible to profit taking. Now, yes, that includes Tesla. It includes companies that have done fabulously in terms of their business, like Zoom. But when they're up 6 times, it just leaves them vulnerable. If somebody takes profit and that selling begets selling from others, that's what you have to look out for. But in the bellwether tech names, I'm not worried about Microsoft, Google, or Apple.
Are you suggesting, Jim, that, okay, interest rates are low, we get it, they're not going anywhere, that you could just keep expanding the multiple and just justify it repeatedly by the fact that interest rates are lower? I mean, you have to have fundamentals eventually catch up to the story, right? You can't go from here to oblivion in multiples just because rates are low, can you?
Of course, what you said is accurate, right? Of course you can't. Trees don't grow to the sky. But when you look at those Apples and Microsofts and Googles, I mean, these are, for the most part, Google's in the high 20s as well. These are not egregiously priced stocks. Now, look, NVIDIA at the beginning of this year was 35 times forward earnings. Now I believe it's around 50 times earnings. Am I rushing out to buy NVIDIA? No, but I don't think there's an air pocket forming underneath it as well.